This is Finance Spotlight, brought to you by ThinkSpace Media. Becoming a stock market guru may seem exciting, promising fame and success. However, it's not just about being right. It's about grabbing attention and maintaining a compelling image. In this world, making dramatic predictions and repeating them confidently, regardless of accuracy, is key. It's about creating the impression of success, even if the reality behind the scenes is more complex. In this video, you will see the best tips to help you master the art of stock trading and investing. And don't forget to subscribe, like, and share your thoughts in the comments sections. Understanding the basics. First and foremost, you need to understand the basics of the stock market. This involves knowing how stocks are bought and sold, what stock indices are, and how they work. Familiarize yourself with key terms like bull markets, bear markets, dividends, and earnings per share, EPS. Developing a trading plan. A solid trading plan is crucial for success in the stock market. This plan should outline your investment goals, risk tolerance, and strategies for buying and selling stocks. Your plan should reflect your financial goals and the amount of time you can commit to managing your investments. Diversification is key. One of the most important strategies in stock market investing is diversification. This means spreading your investments across different sectors and types of assets to reduce risk. By not putting all your eggs in one basket, you can protect yourself against significant losses if one particular stock or sector performs poorly. Consider a mix of stocks, bonds, and other investments to create a balanced portfolio. Staying informed. The stock market is influenced by a variety of factors, including economic indicators, political events, and company-specific news. Staying informed about these factors can help you make better investment decisions. Follow financial news, read market analysis, and keep an eye on trends that could impact your investments. Understanding financial statements. A key part of analyzing stocks is understanding company financial statements. These include the income statement, balance sheet, and cash flow statement. These documents provide insights into a company's profitability, financial health, and cash management. Learning to read and interpret these statements will give you a better idea of which stocks are good investments. Technical versus fundamental analysis. There are two main approaches to analyzing stocks: technical analysis and fundamental analysis. Technical analysis. This involves studying past market data, primarily price and volume, to predict future price movements. Technical analysts use charts and other tools to identify patterns and trends. Fundamental analysis. This involves evaluating a company's financial health and economic factors to determine its intrinsic value. Fundamental analysts look at factors such as earnings, expenses, assets, and liabilities. Managing risk. Risk management is a crucial aspect of stock market investing. Never invest money you can't afford to lose. Set stop-loss orders to automatically sell a stock when it reaches a certain price, preventing further losses. Diversification, as mentioned earlier, is also a form of risk management. Additionally, consider your risk tolerance and investment horizon when making decisions. Patience and discipline. Patience and discipline are vital qualities for any successful investor. The stock market can be volatile, and it's easy to get caught up in the excitement or panic during market swings. Stick to your trading plan and avoid making impulsive decisions based on short-term market movements. Remember, investing is a marathon, not a sprint. Learning from mistakes. Even the most experienced investors make mistakes. The key is to learn from them. Keep a journal of your trades and review them regularly to understand what went wrong and what went right. This self-reflection will help you improve your strategies and avoid repeating past mistakes. Continuous education. The stock market is constantly evolving, and so should your knowledge. Stay curious and keep learning. Attend webinars, read books, and take advanced courses to expand your understanding of market strategies and new investment opportunities. Networking with other investors can also provide valuable insights and different perspectives. Seeking professional advice. If you're new to investing or feel overwhelmed, consider seeking advice from a financial advisor. They can help you develop a personalized investment strategy and provide guidance based on your financial goals and risk tolerance. Even seasoned investors can benefit from professional advice to refine their strategies. The 6 essential steps to being a stock market guru. In the world of the market guru, success is measured by the eyeballs you attract and not the accuracy of your predictions. Here's how to draw them. 1. Be dramatic. In order to attract attention, you must make big, bold calls. It doesn't matter whether you are right or whether it is actionable or helpful. You need to find ways to gain interviews and exposure, and you do that by giving the folks in the news media something eye-catching that they can use in a headline. Big target prices and talk about once-in-a-lifetime events are always a good approach. 2. Keep repeating your big predictions. Once you make a big prediction, keep repeating it. Find whatever data you can to back up your arguments and express confidence that you are right and how it is just a matter of time before your prediction will be proven to be correct. Don't change your mind or express any doubt. The media doesn't like equivocation. They want certainty and strong opinions because that is what sells. 3. Ignore entry points. One of the key elements of being a good guru is that you make it impossible for anyone to track your actual performance. There is no way to be wrong if no one knows your entry point. Timing is the enemy of the guru, so you need to find a way to make sure it isn't an important issue. 4. Manage bad calls strategically. In the case of a particularly bad call, you can claim to have taken a stop and then you can re-enter. When you do take a loss, the loss is always small. The important thing is that you don't admit to being wrong. You just are managing the trade that is sure to work very well. In the real world, it is accurate timing that makes investors and traders the big money. But in the world of stock market gurus, timing is deadly and you can't afford to be too precise with predictions. 5. Proclaim victories loudly. Don't be modest. When a trade moves in your direction, make sure you proclaim victory loudly and often. It doesn't matter that you still may be in a losing position from your initial call. Because no one can keep track of your entry points, you still can be wildly successful when there is any movement in the right direction. You may not make actual money, but that it isn't important to a guru. 6. Create the impression you are always in the best stocks. One trick of many good gurus is merely to talk about stocks that have made big moves and create the impression that they own it without actually saying so. There are a number of prominent posters on Twitter who do this extremely well. They will note that ABC is up 20% and make sure they create the impression that they caught the trade perfectly. They don't outright lie, but they do a nice job of misleading. Pretend to be modest. It is important that you don't come off as too arrogant. Even the most gullible followers will not believe that you never make mistakes, so every once in a while, you need to admit to some bad calls. The important thing to remember is that all losses are minor and that you are hedged so you can't possibly lose any money. The important thing to remember is that being a stock market guru has little to do with being a good investor or trader. The skill sets can overlap, but stock market gurus are more entertainers than teachers. Real traders are humbled by the market constantly, and they know that is part of the game. This is Finance Spotlight, brought to you by ThinkSpace Media. If you found this video insightful and are eager to learn more about achieving financial milestones, don't forget to subscribe to our channel, like this video, and share your thoughts in the comments section below. Together, let's start on a journey towards financial success.